Both of you, appreciate you joining in, Shrikant and Mitesh, with your thoughts. Anand Tandon is with us, he's market expert. Anand, thank you very much for joining us. Good to have you with us here. The market has been seeing some hesitation lately as we've approached closer and closer to the highs. And yesterday we saw some correction. Broader markets are also looking a little tired. What's your prognosis near term, Anand?
Well, Prashant, now that the result season is over, if you look at where we've been left with, the overall earnings is kind of in the ballpark, marginally better than what people were expecting. Some of the commentary has been fairly positive, but the key concerns remain in terms of being able to grow from here, especially because of the fact that many of the sectors that were expected to grow, especially the PLI sectors, are the ones that are going to face the biggest headwinds given what we are seeing in the global markets. And with energy costs being where they are, I don't think inflation is coming down anytime soon. So overall, I think the earnings is not going to give you any major surprise on the upside from here on, and which also means that with interest rates continuing to tick up, and I would imagine that even domestically you will have to move them up a little more. We are still in negative real interest rate scenario. Valuations cannot move up. So it's quite understandable why the market is taking a pause at this stage. It is not particularly cheap. So you basically have to look at this kind of sectors that can show some growth. Near term, for example, building materials is something that is like where the commentary has been quite good. And you could see some continued upside there because prices will rise up a little bit more from here and so on. So it has to be fairly selective, but the key major thrust has to be in terms of corporate facing banks. Credit growth is surging, deposit growth is not so great. So therefore, you'll have to look at those which have the best franchise for being able to collect deposits.
Okay, by the way, the block deal on Nykaa has taken place. 5.4 crore shares have changed hands in a block deal window. It's been spectacular, the kind of meltdown that this whole startup scene has seen as the pre-IPO investors have started selling in a big way post the lock-in ending. Anand, I wanted your thoughts here. It's not just Nykaa, right? There's Policy Bazaar, Delivery, Paytm, Zomato. What do you do with these names? Do you stay away from this whole lot, or do you find some value? And if yes, where?
Well, there isn't much value in any of these. The only question is how far out you're willing to make a forecast and how far out you're willing to pay for it. And I would think that, as I mentioned just now, in a higher interest rate scenario where you have an alternative of looking at a better yield coming in from other places, you're not necessarily going to go buying stocks which are going to promise the moon maybe a decade down the road. So largely the question is that, you are in an operating scenario where overall there can be a slowdown. The adoption of many of these products is going to be slower going forward. So there is a lot of catch up to be done between the valuations that they got listed at versus the actual earnings potential that these companies will eventually have. And I think the biggest example of that is the ed tech space. I think it had got to a level where, the entire education industry in the country or perhaps the world could not have adjusted for that kind of pricing. So I think there is some way more to go. It is perhaps at this stage, if you are looking at internet plays, though there has been a lot of selling going on in Info Edge, it is now at a market cap which is lower than Nykaa or many of the new listed companies. So it may be something that an established business giving you good cash flows, even if it is appearing to have some pressure in terms of slowing down. Also has a bouquet of products, which haven't yet turned around. So therefore, there could be significantly more upside there on a relative basis. I'm not arguing for you to buy Info Edge today. I'm just saying on a relative basis, if you have to be in that kind of space, at least there is a business track record there.
Yeah, all right. Hi, Anand. Good morning. The other spectrum has been the PSUs. They have been ignored. They have been promising for years, but they've not really created any wealth. However, 2022 has belonged to some of these companies because they have given good returns. We just had the management of NHPC. And they are promising about listing of the solar unit. They're promising value unlocking as well. Any of these names, NHPC, NTPC, Coal India, they've done very, very well this year.
So, last time I was on your channel, I did mention NHPC as a stock, which I quite liked, except that, most of these utilities have a rational price, which is not very far from where they are trading. So NHPC maybe, another 5-10%. And then after that, you'll have to worry about where the next bit of earnings is going to come from. But that said, if you were to look at the kind of valuation some of the private sector companies are working on in terms of renewables, these are at a throwaway price. I mean, I don't know why those renewable companies are trading where they are, but if you were to take that as a benchmark, like to like, NHPC is still significant value. I think, with more and more focus on climate change, things like renewables will do quite well. And there is a big challenge in renewables, which is the creation of battery storage. NHPC is uniquely positioned that they can actually create storage out of the water reservoirs that they have. They've not been particularly successful in the past. There are attempts going on in some of the locations, especially in Gujarat, for example, which has not worked so far. But there is no particular reason why that is a technical problem that can't be solved. And if that were the case, the potential for creating battery stored, water stored batteries, or what is called pumped storage technically, is phenomenal in this country. So, on a selective basis, I would still argue that, that's a company that may be worth looking at. NTPC is also rapidly increasing its renewable portfolio. So if you were to take a bet on renewables, I think these are still value compared to many of the private sector companies.
Okay.
I mean, hydro's, solar has been, is kind of sexy, right? I mean, hydro has never kind of been...
Sexy.
Yes. I mean, it's never gotten that sheen, right? Like other renewable sources of energy. But water, as Anand said,
now we are fine-tuning it. It's got to sheen.
Sheen. All right, Anand.
The Friday impact.
Anand, any other names? I mean, I'm just listing out a few things which sold off. You already talked about the new age tech names, etc. RVNL sold off after a big jump recently. Piramal Pharma continues to crack big time. I don't know if you've looked at it. It's a marquee group at the end of the day, and the pharma, of course, is the original business. Anything else? Engineers India Limited, Timken was locked up in upper circuit. Any of these which you track?
So, Prashant, first, talking about water itself, just one more comment. The general assumption was that you're drowning large number of villages, and therefore, rural areas when building reservoirs. The thing today is, from what I understand, that the compensation levels have come up so much and the R&R is so attractive that people are actually asking these companies to see if they can be drowned as well. So the situation has considerably changed, and I think you will find that water is something that is going to attract a lot of attention. Coming to the number of some of the companies you mentioned, besides the business itself, I find the fact is that the Piramal Group has created a lot of money for investors till they went and got themselves into a financial services, which was not something that they quite understood. So if you leave that aside, overall, they have been fairly good in terms of being able to buy out companies and turn them around. At some price, I think, their pharma company will be quite interesting because it's not the run-of-the-mill API manufacturer. It is a fairly niche player, and there is no reason to assume that with the way that the group generally operates in terms of acquisition and turnaround, they will not be able to scale this even further from where it is. So there's certainly a business one you should keep on the radar. The other companies that you mentioned, RVNL, I have not looked at that in the near term, so I can't comment on that.
All right. We will let you go on that note. Have a great weekend, Anand. And we'll see you again later next week. That's the word coming in from Anand Tandon. Let us take a quick break on that note. On the other side, the pre-opening rates, we will also have Sandeep Tandon, who is the Executive Chairman at Sirma SGS Technology, to discuss their business outlook and the Q2 earnings performance. Stay with us.